It's been a year since Mr. Sanjay Malhotra took charge as the governor of the Reserve Bank of India. It's a year in which the central bank has had to walk a fine line between sustaining growth and safeguarding stability. In that time, Governor Malhotra has pushed the envelope on several key fronts. And we are delighted that Governor Malhotra has agreed for a special interview with India Today magazine. I'm Raj Chengappa, and this is my colleague MG Arun. Governor Malhotra, welcome to India Today.
Thank you very much. It's my pleasure to be here.
One of the things that you did, just before you completed 1 year's RBI, and it's been an unusually eventful term that you've had so far, that if you take a look at the global scene, global trade has been shaken by President Trump's return, and of course reciprocal tariffs, and we've felt the weight of it the most. The rupee has weakened sharply. Inflation has fallen to a multi-year low, and yet India has clocked an 8.3% growth in the second quarter of its GDP. Now, you describe this phase as the Goldilocks period for the Indian economy. From a central banker's perspective, how real is this sweet spot? Are we genuinely in a structurally stronger phase of growth, or is this a window created by a unique alignment of global and domestic factors?
Yes, you're absolutely right. This has been rather eventful and a challenging year with all the geopolitical events, tensions, the trade fragmentation that we witnessed. Despite these external headwinds, India in the first 3 quarters for which we have data in this calendar year has done remarkably well, both in terms of inflation. We are in historic lows, as you mentioned,
right.
And even so, in growth, about 8% on an average for these 3 quarters. So we are certainly, in a sweet spot. Going forward, this year we are projecting a growth rate of 7.3%. Next year, Q1 and Q2, we are projecting a growth rate of 6.7 and 6.8%.
I just want you to elaborate on this Goldilocks word that you use. It's a very curious phrase, it's a banker's phrase, but if you could say why you saw it as a Goldilocks period and define the word. When you say Goldilocks, it has various connotations. What in your mind?
So when we say Goldilocks, in economics terms, it is, the balance of the growth and inflation. So generally, high growth means high inflation,
right.
And low growth, and low growth can mean, low inflation. But we are having the best of both the worlds. We are having, low inflation and high growth. So that's a very sweet spot, to be in.
Right.
So, Governor, given that, as you said, that we are in a Goldilocks phase, the next question naturally comes, how do you sustain this? Because, sustaining this would really mean that, we have more private investment coming in, we have more jobs being created for the economy. At the same time, there are so many external factors, like you said, which can really sort of shake up the economy. We still don't have a deal with the US, so everybody's watching that. So, how sustainable is this trend? And also, according to you, what would be some of the risk factors that would, sort of pressurize it from the other end?
Yeah, so it's not, one single factor which has played out in this moment, and we have been, in this kind of a period when you talk about growth for quite some time now.
Yeah.
So if you look at, last 4 years, the average growth GDP is about 8%,
yeah.
Post-COVID. If you look at the last decade, we had an average growth of 6.6%.
Mm-hmm.
Now, this is the result of a combination of measures that the government and the central bank has taken, over the period
yeah.
of time. Number one, most importantly, it is, I think, the policy stability that has been provided, certainty, because, that's very important. Of course, now some external uncertainties are there, because of which you can see some a little bit of a correction in
right.
the growth, but otherwise policy stability, financial stability, price stability, this continued focus on growth of the government and a number of reforms, as a result of which a number of reforms have been taken. Recently, GST rationalization was one of them, followed by the labor reforms. Number of PLI schemes have been launched by the government, focus on manufacturing, on employment, on jobs creation. And then the very solid balance sheets, both of the government, the private sector, and the households. Good capacity utilizations. So I think on the whole, you look at each and every sector, each and every area of the economy, we are in a very good phase, and that should help us in sustaining this momentum of growth going forward.
Right. I'd like to come and to something that you've really done and changed a lot. Is since February 2025, the RBI has cut the policy rate by 125 basis points. It is now points to 5.25%. That's the rate right now. This is striking because the last comparable easing happened, I think, in the cycle in 2019 or so, and that was a bit sharply slowing growth. This time rates have been cut despite GDP growth. So what changed in the RBI's assessment, and do you see this as the start of another process? Will we continue to see rate cuts, or this is it and you will now stabilize?
So if you compare with the last time that we brought down the rates as low as 5.25%, and then it went down even further to 4%, we were in a very different situation. It was exactly the reverse, in fact, because the growth was low and inflation was high.
Yeah.
Right.
And it was increasing. Headline, next year was more than 4%, about 4.8% in 2021, So we were heading into higher inflation, lower growth. This time around, we are having good growth, and we are having, very benign inflation. So it's primarily because of the benign inflation. Last time, it was low growth, which needed to be supported. Now, the real interest rates, as I was mentioning to you, real interest rates, especially, because core X gold is quite low.
Right.
It's less than, it's about going forward, because monetary policy actually works forward looking, it's forward looking. And so the outlook is very benign, 3.5% or so. And so real rates need to be a little lower. And so that's why, we reduced our policy repo rate by 25 basis points. Going forward, monetary policy is not, preset. It evolves. We are data dependent. We are in a neutral phase. It's for the MPC actually, to decide and see what the data points to and what we should be doing from policy to policy. However, as I mentioned, I do feel that inflation should remain benign for a longish period of time. And if that is going to remain, barring, shocks on the supply side, could be weather, could be geopolitics, could be something else, then we are in for a long period of low policy rates.